Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold video. I'm just about to analyze the gold markets, the Nasdaq, the S&P 500, crude oil and the Euro US dollar. But before I get into that, just a quick heads up, if you are wanting our daily advice here, our daily signals, then you can come over to our website www.dailymarketmovements.com. This is the website and you can sign up to our signal service. We send 1 to 3 signals a day, which is fantastic if you're looking for that daily advice. At the moment, our website is currently under maintenance, so if you click on how it works and charts, economic data, etc., nothing will pop up. It's just a home page, so do not be worried about that. There's nothing dodgy about the site. It's just we are waiting for our tech guys to fix this site. If you just click on that buy now button and it will take you through to PayPal. But back to the gold market. So the gold markets are currently trading at 1792. We're trading below that 1800 level. Now, if you would have heard me in last week's video, I did say that I do favor the downside here in the gold markets. I think we're going to go and target this green box here, which is down at 1680. I know many of my clients and many of my viewers here on YouTube are very bullish for the gold markets, but I do not like the gold markets at all. And mark my words, you know, the next 3 to 6 months we will definitely see a pullback here in the gold markets, and I think eventually we break below 1680 and we go, you know, back down towards the 1500 level, where we you know, we found some significant support in areas like this and this, which was back at the end of 2019 and the beginning of 2020. So bearish is my forecast for the gold markets for this week. Going into Wednesday, I'm looking for a further pullback, you know, perhaps down towards 1750 area. And eventually I think we go to 1680. I don't really want to put a timeline as to when we will see that breakdown towards 1680, but I am bearish medium to longer term. Now, looking at the Nasdaq100 chart, if I just bring that chart for you guys. Here we go. So Nasdaq 100 is under pressure today, and that's because we had some very interesting news. You know, as you all know, since you know, the massive sell-off that occurred back in 2020, that's March 2020, when COVID was a huge problem and it was spreading rapidly across the globe. You know, we've had a huge rally. In fact, the S&P 500 has doubled its value since the lows that we achieved back in March 2020. Now, last week we had something very interesting. We had the Fed chair, you know, members of the Fed come out and basically announce that they're going to be selling all of their stock holdings due to ethical reasons, which is quite convenient due to the fact that, you know, as I just mentioned, the stock market has had this huge rally since the March lows, and now the Fed members think it's ethical to now go and sell all of their stock holdings up here. Seems a bit worrying to me, especially now that the Fed is going to you know, begin the process of tapering going into next month. So I think that the markets are really fearful of you know, rising taxes and of course the tapering process. And you know, there's been a little bit of you know, a little bit of downside movement since the Fed members announced that. And I think that, you know, the markets are starting to become a little bit nervous up here at the all-time high. So it's very likely that we go down towards the 50-day EMA at 15,000. This is a good thing though. It creates value, and already there's some fantastic stocks out there, like the likes of AMD, the likes of CrowdStrike, for example, which are down roughly 10%. Sorry, 16%. CrowdStrike, for example, off its all-time high. AMD's down roughly 10% off its all-time high. So if we had a further pullback here, then, you know, there are some fantastic stocks out there which do offer some fantastic value already, and that's without a significant pullback in the indices. So I am bullish medium to long term, but short term I do recognize that we could see a pullback towards at least a 50-day EMA. Going into the S&P 500, very similar, you know, they're very well correlated, the Nasdaq and the S&P 500. In fact, the S&P 500 is nearly at that 50-day EMA. We're only about 25 points away. So I think it'd be a good thing if we go and target the 50-day EMA. I've mentioned in previous videos that 14 times this 50-day EMA has offered support since the March lows that we achieved back in 2020. You know, you can just see it here, 1, 2, 3, 4, 5, 6, 7, 8, and you know, there's plenty of other times as well. So at the 50-day EMA, I would be a significant buyer here, targeting back towards the all-time highs. I think we do bounce. There's nothing really to say that why we shouldn't. You know, interest rates are still at an all-time low. Yes, the tapering process may start to begin going into next month, but you know, interest rates are the important one. As long as that they're down near zero, then I think stocks continue to you know, grind higher. Now, we're going to go to the crude oil markets. Now, the crude oil market's very interesting. We've had a nice bounce back this week above $70. Just want to say huge congratulations to our signal team. We were buyers down at $68, targeting $70 a barrel. We achieved that take profit late last night, so well done to everyone who managed to profit on that trade. Now, where do we go next for the crude oil markets? I like the swing highs. I think we're going up towards $75 a barrel, and then once we break above that area there, I think we go to $80 a barrel. We've had a few analysts on Wall Street today come out and say that they really do like the crude oil markets, and they've slapped an $80 price target, so the same price target that I'm hoping for here in the crude oil markets. You know, it's been under pressure for the past 2 to 3 months since the beginning of the summer, but I think now as we're going into the winter months, we will start to see a rally here in the especially the crude oil markets. So I am bullish here, especially now that we're trading above the 50-day EMA. It's clear that we've had a daily close above the 50-day EMA. If we can break above this little all-time high here, I think we go towards $75 at least. And last but not least, the euro US dollar. So the euro US dollar, it's come under some pressure. We got rejected at the 200-day EMA. We're broken below the 50-day EMA, but on the daily here, we have created a hammer candlestick. So we're currently trading just above that 1.18 area, and I quite like the euro US dollar here. I think that we do eventually snap above the 200-day EMA, break above the swing highs, and go trading back up towards 1.20 and eventually the 1.22 area. So I'm bullish here. I think you buy it on this hammer candlestick, and going into Wednesday, I will later evaluate how this market has performed, but I think we do go back above the 50-day EMA and we go and target the 200-day EMA. So if you are trading for euro US dollar, I would be a buyer here. Towards the downside, we're very well supported here and here. So I think that we do go higher, and I do prefer the euro over the US dollar for the medium to longer term. I think that the US dollar still has some downside to go. Also, RSI is at 50, so we have plenty of room to move in either direction, but as I just mentioned, I do prefer the euro over the US dollar, and I think that we will snap above the 50-day EMA and go looking for the 200-day EMA. I'll follow this video up with a video on Wednesday or Thursday, guys, just to basically see how the market is performing midweek, and then of course I'll wrap things up with a video on Friday. If you are looking for some help or the signal service that I mentioned at the start of this video, then please do go over to www.dailymarketmovements.com, and it will it'll be a pleasure to welcome you upon our team, where you can expect to receive 1 to 3 trading signals a day, and of course daily updates with regards to the movements in the market. So that's all for today. Thanks for watching, guys, and I'll see you all on Wednesday.